Welcome back to 7 Minute Options on Tuesday, August 31st. A short video taking a look at a position in Astra. So, Astra had a bit of a mishap on the weekend with their launch. Of course, the stock tumbled, I think, over 25%, and it's even down even more today. So, it went down over $2 yesterday, being Monday. Today, it's down another 15 cents. It's trading around $9.30 today. So, if I look at the February 18th expiration, that is the farthest out I can go right now. That means there's no other ones in the future right now listed. So let's say that's 171 days away. If I take a look at it, right now the stock is around $9.35. And what I can do is I can take the $7.50 call, right, and buy it. And this one is already almost $2 in the money, right? So this is $1.84 in the money, or 184 bucks. I can turn this into a butterfly by selling the 10, buying the 12 and a half, and of course the 10 we would need to increase the quantity to 2. So you can see here I'm buying one contract of the $7.50 call, buying one contract of the 12 and a half strike call, and selling two contracts of the $10 call. And this actually today only costs me about 22 bucks. Keep in mind the markets here are very wide. So we got a 20-cent wide market here on the 750 strike. We got 10-cent wide market on the $10 strike, and we got a 15-cent wide market on the $12.50 strike. The reason why this is important because we have wide markets, we definitely don't like those. So you want to stay away from these. The reason why this is tricky is because it actually makes filling this at $22 very, very difficult. I mean, this thing's probably going to be open for a long time before the system can fill it at 22. So be prepared to pay 30 or 40 bucks for this. But what's interesting about this one is if you think about it, this thing's a $7.50 is where it starts making money for you. And we are already at $1.83 above that. So we are already in the money on this one. So if you can get this filled at 22 cents, this thing is already at $161 of extrinsic value. So this is already $161 in the money. So if Astra just goes sideways and expires at $9.33 on February 18th, you can collect $161 in profit from this position. I mean, in theory, but you don't need Astra to go down and you don't need Astra to go up. You just need Astra to go sideways. And if Astra does go up and it goes back to $10, that's when you would see your max profit of $228. And if it goes above $10, you can still make money all the way out to $12.50 minus what you paid for it. So your break even is around $12.28 or something. So there's a big wide profit margin on here, and you already have $161 of extrinsic value that you are basically buying for only 22 bucks. And this is one of those positions that already has a positive theta, right? If you buy this, you are basically going to have a 10-cent positive theta every day, which is pretty good for every time you buy a debit spread that has a positive theta that has this much extrinsic value. It's not bad. If I look at the chart on Astra, you can see here that this was puttering around the 820, 830 mark before people got excited about the upcoming launches, and now we're back to the $9 range right now, 950, 930, 940 range. Even if this pulls back to the 820 range, this would still have extrinsic value. You would still not be in a losing position. So at $7.50, right? Going back here, at $7.50 plus 22, your break even here is around $7.72, right? Which is still below this historical low point of 832. So this thing can even go down another dollar, another $1.10, and you would still be above your break even. So that's why I really like this position. Take a look at the graph here. If I look at the curve here, this is what it looks like, right? Typical butterfly. Your max profit is right at $10. That's where you would recognize the max profit. Right now we are here, right? This is the red flag. We're at 930. This orange line here that's curved, that's where we are today. And the reason why you have a positive theta is every single day, this line starts moving closer and closer and closer to the theoretical butterfly line that you see here. And that's what this orange curve will resemble on the day of expiration, right? So this orange curve will bend into shape and will assume this exact shape on the expiration date in February. So I like this one. You know what? I'm gonna try to fill this one. I don't expect it to get filled at 22, but I don't mind even paying 30 cents or 40 cents for this. I think it's something that I myself like. Again, this is not a recommendation. I'm not telling you to go buy this. You know, this is your money, whatever. Um, but again, because this is a debit position, the buying power is only whatever I pay for it. So I'm spending 22 bucks to get 0.1 theta. That works out to roughly 220 bucks for 1 theta. So that's a super good deal for me. Again, I'm not recommending that you buy this. This is only educational and entertainment, blah, 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 blah. But I'm going to try to send this and route this. Um, if it gets filled, great. Again, I expect that it will not get actually filled for 22. So I don't mind paying 25, 30, maybe even higher for this. But I'm going to try to fill this because to me, I think this is a pretty good deal. All right, so that's it for the Astra position. Looking at earnings, I took a quick look at earnings today. I didn't see anything that was a screaming buy for me. Taking a look at some of the ones, Sienna, really good drop in implied volatility. Again, this is tomorrow before the bell. I usually go 10 to 17 days away. If I go 10 days away, the problem here is, let's say if I want to get $100 here, not a whole lot of interest. Again, 10-cent wide markets, which is kind of like, I'm not terribly excited about it, but it's the buying power. So I'm giving up 775 bucks for of buying power. And on the upside, I would need to, let's say again, go out here and usually turn this into a Jade Lizard. I could pick up 127 bucks. I would be at the 26 delta on the downside. I'm at 57 right now with the stock price, so I could I'd be okay with a $4 drop. Do I want to go up 850 bucks of buying power? Yeah, you know, it's not terribly good. And again, it's wide markets here, so this is something. It's not terribly bad, to be honest. Yeah, and if I look at the implied volatility, I'd be dropping from about 70%, which is what this is here, all the way down to the mid to high 40s after earnings. Not that bad. Where does this actually work out to for Sienna? If I look at this, right, if I'm planning to go to the $53 one, which has more of an open interest than the 53 even, which is kind of weird. That's kind of odd, but I'll take it. If I look at the graph, 53 puts me 53.50 puts me right about here. So if you look at it, Sienna bounced off this line back in July and bounced off again back in August. So this might not be that bad. Um, if they have bad earnings, I could drop down into the 49.50 range, take a $300-400 hit, and then I'd have to be rolling that out, which I'm prepared to do. So I can take an $850 hit for this. It's about as brave as I can get with these earnings calls. On the upside, again, there's no upside risk for me here um, because I'm collecting more than the $1 risk here. So if this blows up way past 62, that's fine. I might be able to close this for a $5 or $10 gain, or maybe just close it at a scratch. So I'm going to try to route this and see if I can get this. I don't mind taking the $850 hit, and boom, I fill right away. Fantastic. So we'll see what happens with that one. So that's it for today. All right, thanks.